Okay, so this is our disclaimer. Basically, the webinar is for marketing and education purpose only. It does not consist any financial or investment advice. And throughout the season, we are not delivering any buying or selling trading call. Okay, so these are the topics that we are going to cover today. So we will share you about the basic information of CFD, like what is CFD and then the type of CFD, and our business model, DMA versus market maker. And then you might wonder why trade CFD and the settlement currency. And then you might also want to know how much are the fee and then how you can potentially profit from the CFD. And then it's my obligation to share with you the risks associated with CFD, and you have to decide whether this CFD trading is appropriate for you. So if it's yes, then you might wonder how to trade CFD, and I'm going to show you our CFD campaign 2025. Okay, so what is CFD? CFD is contract for difference, that a contract made between a buyer and seller to gain exposure to an asset without having to take the ownership of the underlying instrument, whereby the difference between the settlement of open and closing price are cash settled. So if the previous slide is too technical for you, perhaps this could help lah. So first, we have our index CFD. So if you want to trade like Hang Seng Index or S&P 500 Index with our HK50 and also US 500, then you don't need to build and maintaining a basket of stock that mimic the underlying index, which you can only trade through CFD. And the second type of list is listed share CFD, where you can actually participate in price champs of like 99 SPMart or DBS Group that without owning the underlying share. Okay, so we have REIT CFD as well. So this can target to those dividend tendency investor that can consider, because you can take leverage position into this REITs, so such as IGB, real estate, and also YTL. And then we also have ETF CFD on various themes such as gold and also Dow Jones US Titan 50 ETF that can track the 50 largest and share companies US stocks. Okay, so for your information, these are the criteria that can be offered in Bursa CFD. So first, the underlying share need to be main board of Bursa Securities. And secondly, the underlying corporation must have an average daily market cap that excludes treasury share of 500 million in the past 3 months at the time of offer. And in the case that it is newly listed corporate, then it have to meet that it does not meet the 3 months market cap, then it had to be 3 billion. And then the underlying corporation must meet the public shareholding spread requirement at the date of offer. So we are pleased to inform that our business model is actually DMA model. So in layman term, the price that you see in trading platform is the same as the underlying in the market, and the order are executed real time. So you get to enjoy transparent pricing, and then your buying and selling does impact to the market. So unlike those market making model, you need to pay like extra bid and ask spread. So rest assured, our listed share CFD is DMA model. Now, you might wonder why you want to trade CFD, right? So with trading CFD, you get the benefit of leverage, flexibility to long and short, no expiry date of contract, transparent pricing, and also participate in corporate action, but not the voting right. Okay, so as I mentioned just now, the first advantage of CFD is leverage, because you only need to come out with a relatively small amount of capital to gain large exposure to the underlying. So for example, if you want to get exposed to CIMB group with 1,000 units at 6 ringgit, so with CFD, you only need to come with 600 ringgit because of this 10% margin. comparing to the traditional share, you need to count with 6,000 ringgit. So same to like Singapore stock, like Vilma. If you want to trade 1,000 unit as 3 Sing, and then with traditional share, it costs you 3,000 Sing. Well, for CFD, because of 10% margin that we charge, it's only cost you 300 Sing. So same for if you want to trade for S&P 500, like if you want trade 1 unit at 6,000, if you are going to the futures with mini contract, you need to come out with $22,000. But then with micro contract, you also need to come with around $2,000. But with CFD, it costs you like 5% margin, which is $300 only lah. Okay, so with margin, you can actually utilize your fund. Because 10% margin provides trader 10 times leverage, while for 5% margin, grants trader 20 times leverage. Okay, however, with leverage, the gain and losses are magnified, so the risks are much greater. So there is no maximum gain on your trading position if the market is moving in your favor. But then if the market moves against you, you may lose more than the fund that you deposited in your account. Okay, so why trade CFD? The second reason is because it gives you the flexibility to long and also to short. So in layman term, that you can take a bullish and also bearish stance lah. If you are doing the buy, means that doing the long like bullish stance, it means that you buy now and then you sell later. While in bearish stance, you sell first and then you buy back later. Okay, so the third reason that trade CFD is that because of no expiry date of contract. So unlike like futures, if you are trading the Dow Jones index, the future is always expired on quarterly basis on the third Friday or 1 day early if it's a non-business day. And also like Hang Seng, it is expired 1 business day before the last business day of the month. But then with CFD, you don't need to worry about the date of the expiry date. So as long as you have sufficient fund to fulfill the margin requirement, CFD gives you the flexibility in the holding period. Okay, so the fourth reason of trading CFD is because of the transparent pricing that I mentioned just now lah, because of our DMA model. Okay, so our listed share, ETF, and also REIT CFD are DMA model. So the trader can actually participate in the liquidity and order book of the underlying. And what you see is what you get. So you can make and tag the price. Well, for our index CFD, it is streamed real-time by panel of our liquidity provider. Okay, so participating in corporate action is also one of the advantage of trading CFD. So despite not actually owning the underlying instrument, right? But our CFD trader are still entitled of the corporate actions such as cash dividend, bonus issue, share split, and also consolidation. So for example, if you are holding 10,000 units of Apple share and Apple did announce for 25 cents of dividend per share, you are actually entitled for this $2,500 of the dividend. But keep in mind that with CFD, you are not entitled for any voting rights. Okay, so it comes to our settlement currency. So all CFD are settled in their respective settlement currency, means that all the profit, losses, and charges arising from the trade that held in your account are in their respective currency. And they are not automatically converted to your preferred base currency, means that you need to ask your FBR to perform the foreign currency conversion. In the case that if you are trading like maybe foreign counter, if you are trading Apple CFD, then it will be settled in USD. And then if you are trading like Alibaba CFD, it is settled in Hong Kong dollar. And while for Japan 225 index, then it will be Japanese yen. Okay, So right now you might wonder how much are the fee. So we have commission fee. So commission fee is charged on each CFD trade and is calculated based on the percentage of the full contract value of the underlying stock that you are bought or sold. So the formula will be commission amount equal to trade quantity times trade average price times the commission rate. So for example, if you are buying 1,000 unit of XYZ at $10, and then the commission will be 1,000 times 10 times the commission rate 0.25%. So it costs you $25. Well, if you are trading ABC 500 units at $5, and same thing, the 0.25% commission rate, we will still charge you $15 because of the minimum commission. So if you want to know more about that, you can go to our website showing here for our latest commission rate. Okay, so beside for the commission, we also have overnight financing fee. So this financing fee is charged on any CFD position they held overnight, and then it is computed based on the end of day mark-to-market value of your CFD portfolio and charged on the full contract value. So overnight financing fee is charged at an effective rate and is debit or credit from your account on a daily basis. And then if you are doing the intraday, means that you do not hold any position overnight, it does not charge any financing fee. And then our overnight financing effective rate will be the financing rate plus or minus the central bank rate. And the accrual day will be Monday till Thursday, 1 day each, and then Friday count as 3 days because of considering Saturday and Sunday. And then number of days in years will be 360 days. They count for US sector CFD, and then 365 days for the other. Okay, here comes to the example of the financing fee charges. So for example, if you are long 1,000 unit of XYZ CFD and then the mark-to-market is $10 from day 1 to day 2, so the central bank rate will be 0.98%, and then with financing rate 4%. So your effective rate is actually 4.04 plus 0.98%, which is 4.98%. And because of you are holding from day 1 to day 2, the end will be 1. And because of this is US settlement counter, then the year count will be 360. So to count the financing fee, it will be the contract value 10,000 units times 10, the price, and then times the effective rate, 4.98, and then times 1 divided by 360 days. So which costs you 1.38 per day. And then if you are shorting, you are holding the short of this XYZ CFD, same thing, 1,000 units and $10 from day 1 to day 2. The central bank rate and financing rate is the same, but then your effective rate will be 4 deduct by 0.98, which is 3.02%. So you can see that we are taking this 3.02%, and then your actual financing is charged as 0.83. So in the case that the central bank rate is greater than your financing rate, and if you are holding short position, then the financing is actually credited into your trading account. Okay, and then now comes to an example of how you can potentially profit from CFD that compared to like traditional shares. So for example, on Friday, you are buying 100 units of Microsoft at 300, and then on Wednesday, you are selling it out at 320. So let's look through the example. With traditional share, the initial outlay because of the cash fund account, you need to count with 30,000. Well, for share CFD, you only need to come up with 3,000 because of this 10% margin only. Okay, and then the commission, assume that is 0.2%. So you get 30,000 of the contract value times 0.2%. So both are the same $60. And then, well, for the contract value that you exit position will be 32,000. And from that, 32 divided by 30, you get $2,000 of the gross profit. And these are the commission for your exit trade, $64. And because of CFD, you are actually you have to pay for the financing fee and assume that it's 6% per annum. So you get 30,000 times 6% times 5. This 5 is because you are holding from Friday until Wednesday. Divide by 360, so you get the financing fee of $25. So when you come to net profit, traditional share is actually you get 1876. Well, for listed share CFD, because of you need to deduct another $25 of the financing fee, your net profit is 1851. But when you come to an return on initial outlay, from the traditional share, you get 6.25% of the return. However, with the listed share CFD, you get 61.7% because of the initial outlay that you come off is only 3,000. So your gain are actually amplified due to the leverage. And then when you come to a loss scenario, same thing that you are buying 100 units of Microsoft at 300, and then on Wednesday, you're actually selling it out at the losses of 280. Okay, same thing for all the initial outlay, contract value, and also commission for enter trade. And then for exit trade, right, you are actually losing $2,000 for both. And then the commission charging you by 28,000 times 0.2%, which costs you 56. And also the financing fee only charged for this CFD, and it costs you $25. Now, when you come to the net profit, right, you actually can see that you are losing 2116 and also versus 2141, which not that much more difference. But on the return on initial outlay part, you see that the return is 7% versus 71%. This is also because of the initial outlay that you are paying out lah. So the risk of loss in CFD trading can be substantial, and you can actually lose more than your initial investment. So CFD investors are not the actual owner of the underlying instrument itself and do not have any rights over the underlying instrument. Okay, so from this example, you can see that the loss are amplified also due to the leverage. Okay, so it's my application to share with you these risks associated with CFD. So CFD is a complex, speculative, and high-risk product with volatile return. So these risks may lead to unfavorable financial outcome where your losses could exceed your initial deposit. So you should seek independent advice and consider carefully if this product is appropriate for you in relation to your personal circumstances, investment experience, financial goal, and needs. So until you fully understand the product, benefit, and also risks associated, you should not trade CFD. So these are the risks that if you are trading CFD, which is like leverage risk, counterparty risk, market risk, liquidity risk, and then gapping risk, execution risk, stop order not guarantee, and foreign exchange risk, and also operational risk and regulatory risk. Okay, so right now, if you are considering to trade CFD, so you should ask yourself, do you have previous investment or trading experience in financial product, such as security and derivative? Do you understand the difference between investing in share and also CFD? So do you understand the concept of leverage, margin, and volatility? Are you prepared to monitor and manage the risk of trading? And can you afford to lose all of or more than the initial capital that you put in? So if all the answers are yes for these 5 questions, then yes, maybe CFD is appropriate for you. Okay, so how you can trade CFD? So we are actually providing an online CFD trading platform, and then the selected market fee are delayed by default, but user can subscribe to the real-time market data. So what is the feature that we have in our trading platform? We have view account, you can view account balance summary and also portfolio position details, create and manage user-defined watch list, and then input buy or sell CFD order, and then input in contingency order, and also search and view historical order, and execute trade. Okay, so these are the order type that with our CFD platform viewpoint. So you can get market order, limit order, stop loss market order, stop loss limit order, and also take profit order. Okay, so we are pleased to inform that we do have our web-based and also mobile-based trading platform. And if you are interested to our CFD trading, then you can, and you want to know more about it, you can actually go to our corporate website, cgsi.com.my/en/CFD, to have a view of our CFD Investing 101 video series. We have prepared it for you to know more about it. So these are how you can access to it. And then currently we are running a CFD campaign. So every CFD client is automatically enrolled to it. So you don't need to do any registration and also no leaderboard competition. So all you have to do is only trade CFD that we offer. So either like from Bursa, Singapore, Hong Kong, Australia, Shanghai, and US exchange from 1st of April to 31st of December. So winner will be rewarded based on their accumulated brokerage in their trading period. This means that you won't need to be competing with anyone, and you will be rewarded as long as you generate certain brokerage tier. So the rewards are our NVIDIA or Coty CFD. So after you get the CFD, right, you can decide whether you want to hold it or you want to sell it. So take this chance to win our exciting prize. You will not want to miss it lah. Okay, so comes to an end for my my presentation. So if you are interested in winning any prize or trade any CFD, you can contact your FBR. So if you do not have one, then you can just contact through the email stating here, or can call us anytime. Okay, so I'm going to pass my stage to our Head of Retail Research, Mr. Kong Se-xiang.
Yep. Thank you, Jinghui. Good evening, everyone. Yep. So today I'm just going to talk about ASEAN market. 1 second, yeah. Oops. Okay, so this is just a standard disclaimer. So if we take a look at ASEAN, right now we think that ASEAN is actually at the forefront of a fairly big move to the upside. I think in the region itself, it's not just ASEAN. I think the whole of Asia seems to be moving in a bullish direction, although fundamentals may not support this view. But from the technical perspective, it seems like everything seems to be in place for a fairly strong move, or at the start of a what we think would be a big bull run. So at the beginning of bull runs, you find that markets tend to be fundamentally weak. Nobody believes the story. Then you find that you find a lot of negative news at the start of a bull run. So usually you find that bear markets actually that do not actually end on good news. They actually end on very, very bad news. So if you take a look at right now over globally, you can find that a lot of negative stuff is happening right now. You get political problems over in Thailand, Indonesia. Then most recently in March, you have the earthquake. Then of course you have the Trump's tweets and stuff, all its tariff liberation day. So everything does not seem right for a bull run. But from a technical perspective, at the end of its consolidation, you'll find that a lot of all this negative news that will take place before it starts a big move. So right now, if you take a look at this, is the MSCI ASEAN Index. So the ASEAN Index, we think it's actually at an opportune time to actually start looking at ASEAN as a whole for investment. Long thing right now is that we see that the consolidation from the 2013 high looks like it's completed this year. So at the end of April was from the chart, you can see that it's a very, very long candle. That actually potentially could signal the end of a consolidation. So right now, from a risk to reward perspective, you're risking about roughly 15% for potential move over the many years to come. That will probably take this index to all-time high above the 970 levels. So right now, you can see the long candles actually marks low for a lot of the many years. You can see the long candles mark the low for 2020, mark the low for 2015, 2013, and 2011. So long candles usually has got a nice tune to it, because everybody who was waiting to sell would have already sold. Then that would also see a selling climax in the markets. So right now, with the long candle that we saw in April, potentially a selling climax is done here in the ASEAN market. So potentially we could see it could start to kickstart a new bull market here for ASEAN. So this is just another alternative ETF that is listed in the US. This is the Southeast Asia FTSE ETF, Global X FTSE. You can see that this ETF has actually breached its 12-year consolidation. So it's been trading sideways for 12 years, but it broke out in 2024, and the recent sell-off actually took prices to retest the previous highs of the range. So what was previously resistant, now acting as support, actually held up prices, and prices seems to be moving in the right direction over the last couple of months. So right now here, with the ETF breaking out of its 13-year range, we could see more upside to go. Again, here is about 14% risk to the downside for potential move to all-time highs beyond the 1770 levels. So if ASEAN move, some of the ASEAN countries would have to move first. And the first country that we think that will likely lead the way is going to be STI, so the Straits Times Index. So right now, if you take in terms of chart patterns, the Straits Times Index has got the cleanest price movement. So the patterns that we see on the STI is the clearest and the cleanest. So it tells us that the STI is actually now in a mega bull run. Okay. Again, nobody believes this story. The question is that when I speak to my trader friends or fund managers in Singapore, or people who trade Singapore market, they usually tell you there's nothing to buy in Singapore except the three banks. Of course, that's not really true, but that is the sentiment or the view of people who actually trades who lives in Singapore and trades and live in Singapore. So that tells you the market or the people in Singapore itself are not really bullish about their own market. But if you take a look at the STI index, it's actually trading just off its all-time high. So that there is a big difference or a huge variance between sentiment and price. So price is actually telling you that it's very, very bullish, but the sentiment does not. So it tells you that if once these people start to change in their view, this index here will really move, and it will really move very fast. So right now, if in terms of how we look at markets, potentially we could see a fairly strong move over the next 3 to 5 years for the STI. So as you can see at the top of the charts, we have our long-term targets from 4,003 to about 6,400. I don't think it could just stop at there, but those are the targets that we are looking at over the next 3 years. So potentially almost 50 to 60% upside at the minimum, we think. there's still quite a bit to go. Yeah. So right now, as I mentioned earlier, at the start of bull markets, nobody believes it. The we call it the train, the bullish train is actually empty. So market actually, the April sell-off that we saw actually kicked out a lot of people. Even the largest of funds were kicked out. But that's usually what happens when at the start of bull market. So the market tend to kick everybody out kick you out of the game first before it actually moves in the direction that it wants to move. So here, if you zoom in, you can clearly see the structure of an uptrend taking place from the 2020 lows. You can see the April sell-off actually fell to the exact level where the support trend line was from the 2020 lows, and then it started to bounce sharply. So that tells you that if there is even another sell-off, potentially if there's another sell-off that comes in, very unlikely it will go back below the 3,300 levels here for the STI. But any pullback here remains a strong buy for the Singapore market. Okay, take a look at JCI or Jakarta Composite Index. We believe the consolidation here is also done. You can see the long-term uptrend is still up. It's holding above the red line, which is the 200-month moving average. So it tells you that the long-term picture is still very bullish, despite all the political situation that is taking place in Indonesia. So if you zoom in, so we can see that the rally from 2020 actually peaked in 2022, and then after that it was a 3-year consolidation that ended very likely in April, and then we saw a nice 1,000 over points move over the last month and a half or 2 months. So that tells you that I think a low is already in place and is now getting ready. So for now, I think same picture across the board. Any near-term weakness would again provide a very nice entry level for in this case into the Indonesian market. So as long as the April low stays intact, we continue to be bullish in the Indonesian market as well. So if we zoom in, that was the JCI in rupiah terms. So if we convert it into USD terms, you find that the JCI is actually building a very, very big base, almost 11 years, above the 1997 and 2008 highs. Okay, so it's building this large base. So once it breaks out, and when it breaks out, usually the longer it consolidates, and when it breaks out, the price would really move to the upside. So in this case here, if in US dollar terms it starts to move, by chance it also signals that there are lots of funds that are also coming in. So right now it's starting to move a little bit, but if it pushes beyond 0.5118, very likely that will be the start of the next bull market here in the Indonesian market. So what about Thailand? Thailand has got lots of problems, so-called problems, but you can clearly see for Thailand, it's just been in consolidation since 2018. So you can see that the sell-off from the 2022 high actually fell to a long-term support. If you take a look at that green line, again from the 1998 lows to the 2008 lows, if you just draw the lines across, you find that prices stop exactly where the line was. If you draw a trend line, the red line from the 2011 lows to the 2020 lows, again, prices, there is a double support right now close to its current levels. So it is at a very, very key support level. We expect prices to turn. So there are no signs of a turnaround just yet in the Indonesian market, but with prices holding up steadily over the last few months, it could be building a nice base here for the Thai market here, getting ready for its next move higher in the coming months. Yeah, so last and of course, if all 3 markets in ASEAN is looking good, I'm sure KLCI will also be looking good. So again, if if you have seen this, those of you who joined the Sharia webinar yesterday, in the afternoon yesterday, I've already have talked about this. So if you take a look at the long-term chart for the KLCI, every sell-off for the KLCI or the Malaysian market was a long candle actually ended most of the sell-off in the Malaysian market. Like if you take a look at the sell-off from in 2008, it was a long candle at the end. At the end of 2011, there's a short sell-off that was also a long candle. And 2015, that was also a long candle. 2020's COVID also with a long candle. And so potentially the April candle, which was also a very, very long candle, would have also been a nice low here for the KLCI. So again, so if this marks the end of the consolidation from the 2014 highs, so potentially this also could be the start of the next move higher here for the Malaysian market. So long-term picture here, there is some strong resistance roughly about the 1620, 1625 levels. And then followed by 1684, 1695. I think once prices pushes beyond that, it should clear the path for a new all-time high here for the Malaysian market over the next few years. Yep. So currently the pullback that we are seeing right now is at very nice support levels. You're risking in terms of risk, you are risking for against the April lows. So April low was 1386. If you mark it right now, it's roughly about from current levels of 1520 or so. Yeah, so that is you're risking about 140 points. Yeah, 140, yeah, about 140 points. So 140 points for a potential move to beyond 1900s. That I think is a risk worth taking. And if you're looking for signals, a lot of signals are starting to come through over the past few days. But if you take a look at the blues, the blue chip markets is already started to move higher. Yeah. So in terms of picks, we like the banks. So if we take a look at this long-term chart for Maybank, prices pull back to a nice support level and form a three-candle reversal. If it closes Friday around these levels, it would have formed a nice three-candle reversal of a long-term support trend line. So that would also potentially signal prices or Maybank starting or getting ready to move higher. It has very likely in the long term, it's going to take out its all-time high, targeting roughly about 11 to about 1120 levels on the upside. So that should not be the top end, but these are just the near-term targets we are looking at for Maybank going forward. Of course, you're looking to trade right now, then your stop could be placed below the most recent low at about below 953 or below the last swing April low at about 932. So CIMB also the same thing. It's still in a long-term uptrend. It's marginally trading marginally below its support trend line. But as long as the April lows continue to hold, the structure should see prices continue to push higher here for CIMB as well. So we expect, CIMB to move back above the long-term trend line over the next few weeks. More upside should lie ahead if prices pushes beyond 734. So targeting about 830, 905, and 950 over the next few months for CIMB. Your stop is below 621, which is the April low. So we also like FNN. FNN also looks like it's completed its correction from 2018 to 2022. We see a nice rally from 2022 to 2024, and the recent pullback actually found support at the base channel. So the recent move over the last month or two tells us that prices is now getting ready to push on higher. So any weakness or any pullback here for FNN here is still a buy against the low of 2240. So tech stocks also, we are fairly positive on tech stocks as well. This is MPI. Recent move could prices could also found actually the pullback from the bounce from the April low bounce actually found support at about the 1750 to about 1890 levels, and it started to bounce. So if prices do kick on and pushes beyond the May highs, that could potentially be the start of the next move higher here for MPI, targeting at least about the 26 level, which is the 200 week exponential moving average. So what about Singapore? So Singapore UOB also clearly satisfy its long-term uptrend. It could be in some sort of a short-term consolidation in the near term, but with prices still in a long-term uptrend, any pullback here or any weakness in the near term should find support close to about the 32.75 to 34.50 levels. We think that is a good buy level for UOB longer term. So you can place a tighter stop at about 32.70, which is just below that band. Of course, the long-term picture does not change even if it breaks 32.70, but that is just for a trading perspective. But as long as prices stay above the April low of 28.05, we shall still be looking for more upside for UOB over the next few months to few years. So for SIA, it just came off its all-time high not too long ago. It tells us that the long-term uptrend is still intact. We should see further strength once prices push past to a new all-time highs above 718. So further weakness down to about 645 to 663.65 is a good entry level here for SIA. Your stop should be placed below 590 and below, or below the 200-day below 582. So it has a long-term multi-month target close to about 850. So one final one, which is Thai beverage. It's still stuck in consolidation. It's been consolidation since 2016. Nothing seems to be happening, but right now prices are sitting exactly at a key support level. From a risk to reward, this is going to be a huge trade. Of course, this one won't move as fast as those that have already broken out, but this could be at the start or the lower end of in terms of risk. You're only risking down to about 40 cents and below. So your stop here, if it breaks 40 and a half, you can choose to actually get out first. But so that you're risking right now, you're risking close to about 6 cents for a potential easily beyond a 50-cent move here for Thai bridge over the next few months. So here again, we like Thai bridge because it's sitting exactly at a key support with a stop. If you're looking to get in now, you can place your stop below 40 cents here for Thai BEV. So that actually ends actually my presentation today. We expect the tigers of old to come back. ASEAN very likely will also just tag along together with most of the ASEAN markets. Singapore will lead the way, followed by Indonesia, Malaysia, and Thailand. So if you take a look at all those countries that have actually made all-time highs, not too long ago, which is Taiwan, Korea, and Singapore, they all have trade surpluses. So will Indonesia, Malaysia, and Thailand be the next to follow? Yeah, so I think sector-wise, Malaysia also looks primed for a fairly strong run. Most sectors are in place, or the chart shows that it's getting ready for a nice move to the upside. From a risk to reward perspective, we are at a good level given that nobody actually believes the current situation can be a bullish opportunity. So we think that you should get ready, get a ticket, and get ready for the ride of your lifetime. Yeah. So in the midst of all this chaos, there is very likely lots of opportunities. We think that this is going to be one for the big one. So yeah, so thank you very much. This ends my presentation today. Thanks.
Okay, thank you, Xiang. So to our participant, if you have any question, just type out at the chat box or the comment box if you are looking through the Facebook source.
Yeah, if you have any questions, you can just pop it in. I can look at stocks from Hong Kong or Singapore or Malaysia as well.
Okay, so Xiang, I saw one question coming in. So what do you see on the oil company stocks like Hibiscus and also Wasco?
To me, the war means nothing. Let me just show you. Wait, yeah. So if you take a look at crude oil prices, so if you take a look at crude oil prices, despite the so-called war, you can clearly see prices are rejecting all the resistance. So it tells you that we have been bearish against 82.63. As long as prices stay below 82.63, we will remain bearish for crude oil. So despite the war, prices rallied strongly but could not break this double resistance, form a very, very, very negative candle. So odds will still favor more downside, possibly down to retest this 58 levels over the next few months. So we maintain negative on crude oil prices. So very likely stocks like Hibiscus or Wasco would likely still be in consolidation in the near term.
So got another question coming in, say that how about technical company?
What do you mean by technical company? Tech stocks, you mean?
Yeah, I think tech stock, like IT company.
Yeah, so tech stocks, I think if you're looking at Malaysia, then I think that we are getting to a level which is key. We should potentially see a very strong move to the upside in the second half of this year. It won't be a nice move, right? I can definitely confirm that. But every move or every swings will likely see prices continue on higher. Let me just show you KL Tech then. So this is the Bursa Malaysia Technology Index. So prices also pull back to a nice, oh, sorry about the mess. Yeah, so from this 2013 low, if you just draw across, the sell-off took prices down to the support and it started to bounce. So every time it goes into the oversold, the RSI go into the oversold, it marks a very nice bottom for the technology index. So we also have a nice bottom here right now, which could prompt a nice rally over the next few months here for the technology stocks here in Malaysia.
Okay, there's another question. What's the technical view on Alibaba in Hong Kong Stock Exchange?
The long-term picture for Alibaba is definitely up. So I think that the consolidation is slightly over. So from here, you can actually see some very uneven inverted head and shoulder pattern. From this low also, you can see prices also form a higher high, higher low, which is the basis of a uptrend. So it is starting an uptrend. It's just getting ready for its next move out. So right now, it's actually sitting at a key support that we have, which is 100 and about 101 to about 119 or so. So it's sitting exactly I think over the next few weeks, it may still drop to retest this low here at close to about 100 levels. But once it breaks to the upside and it pushes beyond 130, high chance this could be the start of the next move up. And when this moves, this one could easily take prices at least close to this all-time high at about 290 to 280 to 90. Yep. So we have targets here of about short-term targets close to about 155 to about 160. Slightly medium-term target at about 175. Long-term targets is at 210, 220.
Okay, we got participant interested on public bank technical.
Public bank is still a buy. So despite all the negative news, prices did not fall. So that tells you that there are quite strong underlying buying pressure. Yeah, sorry about the lag. Hmm. Yeah, so I no, it's lagging quite badly. But anyway, if public bank shouldn't run too far from what CIMB and Maybank is doing lah. So I've shown just now the chart for the banks. Public bank again would not be too far lah. The performance may not be exactly the same, but the trend should remain the same. So if both CIMB and Maybank still in a long-term uptrend, public bank is also there. PK.
Okay, so if there's no much question coming in, then I think we can end our season already.
Okay, so let me just finish with public bank then. Hopefully it goes. Uh, yeah. So if you take a look at public bank, same thing, long-term picture. It's from the 2020 lows, it's still an uptrend. So prices pull back to this support and then bounce, form a nice white candle this week. So potentially still looking for a breakout. So one prices breakout, this easily will push to beyond its all-time high above this 460, 470 levels. Yeah, so still looking higher. As you can see, very similar to Maybank and CIMB. So as long as this structure here remains going to a new high and then a new higher low, a new higher high, new higher low, that is still an uptrend. So you don't have to worry what's happening in between where it can chop sideways, but once it breaks, the next move should be a lot higher beyond this high here. Okay, so looks like it's done for me as well.
There's another question coming in.
Okay.
So it's asking about gold and silver price.
I think it will be pretty bullish for gold and silver lah. Yeah. GC. So I'll just use the COMEX prices. So I've got 2 minutes before I get locked out. Yeah. So this one here, long-term picture is still up. Short-term, it could consolidate sideways for a little bit. Potentially this could be a lot more upside to go. The key level remains 2949. As long as it stays above 2949, we're still looking for higher prices to go here for gold. Silver, same thing. Silver is starting to break out of a key level as well. I don't have prices for silver here, but I think when prices break out of that key level, so same thing, like shouldn't run too far from gold, given gold has rallied quite a bit and silver hasn't moved. So silver will likely follow over the next few months. Yep.
Okay, so here comes to end to our webinar. So thank you for our participant for joining, and also thank you for Mr. Kong to share about the technical and also the fundamental of this thing lah.
Yep. Thank you guys.
Okay, have a good night.
Good night.